The one stock that Jim Cramer said that he would own if you could own any one stock right now, well, here it is. I'm going to go ahead and I'm going to minimize my screen for you real quick, and I'm going to play it for you. Let's do it.
Talk about, Jim, if you could only own one stock, one of the ones we just mentioned, which one do you own?
I'm going to pause it. He talks really quick, but there you go. I'm going to let him talk right now.
Alphabet. Okay.
So the reality is, folks, is that that particular interview, that slot on CNBC there, that was actually from October 30th. I thought it was a little bit more recent. At the time of this recording, it is Wednesday, November 18th. So what happened was Google actually released their earnings after the market closed on October 29th, and they're the only stock of the big, huge, massive tech companies that did release their earnings on October 29th. I also did do a video on that. I'll put a card in here, a little info tab here, so you can actually see that video. But basically, yeah. So Google, was the only company there that actually went up, after they released their earnings, and they had a blowout quarter. And a lot of it is, partly due to YouTube. So one thing that's great. So right now, Google's price, it's, huge. It's $1,770. You're going to be, it's going to be most sensible to purchase those, as a fractional share or slices. Through Robinhood or M1 Finance, you can actually get, even Charles Schwab, get them as cheap as $5 to get those shares. And their market cap, 1.18 trillion, not bad. One thing that's really, I was pleasantly surprised about with respect to Google and Alphabet. It's really the same company, right? Alphabet is the parent company. Is that pretty attractive revenues, 161 billion. So they're actually almost 20 billion more than Microsoft now. Hard to believe they're well over twice what Facebook is. I can't believe Facebook is that high now. But basically, another couple things to take a look at. Really high gross profit margins still for Alphabet at coming in at about 55%. And again, I did do these financials the weekend before the earnings release of Google. Okay, market cap to gross profit, it's a ratio of 12. That's pretty much one of the lowest on the list there, and a year-over-year growth rate of 15.4%. So Google is still a growth company. You take a look at some of the stocks I follow on the bottom of the list, which is Peloton. They had the highest year-over-year revenue growth at 50%. Roku is somewhere around the 35%. So, it's hard to imagine how much more than 15% Google can have, but you figure at slightly above, 1 trillion, it's a great investment. I just took a look. I do have quite a bit of exposure to Google, certainly not more than about 4% in any of my portfolios or my M1 Finance Investor Pie. But, I'm about my strongest position. I'm up about 64%, and that's over 2 years or so. So, definitely a really good investment, and that's Jim Cramer saying that there again on October 30th, the day after Google did their earnings release, and it was also before the election. I'll have another video on the what Jim calls the Fort Knoxes in terms of tech stocks to actually own. Okay, everybody, thank you. So remember, in this video or on this email, you're going to see a link to my M1 Finance Investor Pie. You can go ahead and go over there. You can invest in my Investor Pie, or you can invest in a bunch of other expert pies, which are world-renowned hedge fund managers there. Also, if you're not already, you can make money from your social media profiles. You can generate leads if you're a real estate agent or a coach or whatever. Generate leads, generate profits, or just make money from your social media profile. My program is called Profile Profit Machine. You'll see that link in there. And then lastly, I've got a wealth and instant credit blueprint. It's only $7, and you get five guaranteed credit cards from it. Okay, guys, have a great week, and thank you so much.